Here we go. Welcome back to Stocks by the Numbers. Just wanted to do a quick earnings update here. We had a handful of companies report today after market close, so let's get into it. First company, Arm Holdings, symbol ARM, listed here on the NASDAQ. Stock recently went public and has actually been on a really nice run up going back to about the second half of 2023, and we can see we're on the up and up. The company was posting some decent earnings coming into this quarter, consistent beats for the most part across the board, and they come in, they do it again. EPS comes in at 39 cents a share, analysts expecting 34.2, so nice 14% beat. And the revenue comes in very nice, 983 million. Analysts were expecting a little over 949 million. So they beat by roughly 33 million, about 3.5%. Stock right now down after hours 7%, down to about 160 and change. And in my opinion, we could potentially make the argument that it's overvalued. I'm sure if we bring up the news, they're probably going to say like, "Oh, this sector didn't do well" or whatever. But let's see what we're talking about here. I hate when it gets stuck like that. Investors perhaps wanted more oomph in the forecast after ARM stock rose 40% to start 25. Following a roaring start, ARM Holdings could come back down to earth after earnings. Let's see, outlook. Yep. It's never enough. ARM projects 1.175 billion to 1.275 billion in revenue for the fiscal fourth quarter. Analysts have been modeling 1.221 billion, so yeah, that's kind of in the range. The company also is calling for 48 cents to 56 cents in adjusted EPS. Midpoint of that range lines up with consensus estimates of about 52 cents. Let's see. Royalty business accounted for 580 million in revenue versus 568 million that analysts were looking for, so that's good. While licensing business accounted for 403 million in sales versus the 838 million consensus. Okay, so that I guess was a pretty underwhelming report just for that segment, but I mean technically the company still beat. In all, ARM brought in 983 million in revenue, up 19% from a year earlier, and ahead of the 949 million that analysts had been modeling. Quote, new AI hardware, the rise of AI agents, and the emergence of smaller, lighter language models are unlocking edge AI use cases in smartphones, PCs, consumer electronics, automotive, and industrial devices that are often distant from the cloud and untethered from the power grid. The recent DeepSeek breakthroughs have investors thinking more about compute efficiency through big companies like Alphabet. Say they were already focused on that. Though big companies like Alphabet, yeah, sorry, I don't know. ARM and shareholder that AI-led cloud demand continues to increase, led by large-scale AI training and inference. Stargate joint venture. Stock is falling. Yeah, so again, even when the company beats and what they say, they were showing like 19% growth or whatever, I guess it's just still not good enough. But we could make the argument that the stock, again, is overvalued here. If we back up, coming out of the gate, you can see we popped up a little bit and then we started to drop down and consolidate, and then we started to break up and out here going into these earnings. So going from this low here, top left of the screen, you can see 46.5 even, right? Back-to-back days. So I went from 46.5, and here, let me just zoom in a little bit for you. So yeah, like one line is the bottom of this wick on October 31st, 2023. One's to the bottom of that wick the day before on October 30th. And the top one's going up and touching the bottom body of that candle on October 31st, 2023. And you can see how these trend lines line up perfectly, right? And that's right where the stock dropped to, and then it ran up and it got right to that trend line, pulled back to the moving average / fib level, bounced up nicely coming into earnings. Now we pulled back here to 162. So in the immediate short term, we could definitely come back down here to this trend line, looking at about 135 maybe even 134 if it happens immediately. In my opinion, I would actually consider potentially jumping on board the put side of ARM Holdings. Because again, the company is doing very, very well. But I mean, market cap 170 billion. PE 268.5. This is what I mean. We can't have just these overinflated valuations across the board. And that's what I think we're seeing even with larger tech names as of late. Even if the company comes out and reports a decent quarter, if it was kind of viewed as overvalued to begin with, we might drop it even on an earnings beat, which I mentioned years ago when I started the channel in multiple videos. That's my biggest concern when we're talking about, especially a tech stock, but when we're talking about a stock that's just been on the up and up and is trading near the highs. This is why you have to be careful. But stock kind of hanging out 6%. Again, we could completely come back down here, and the numbers do kind of back that up. EPS has been really solid. Annually, the company's growing nicely, but again, you can see for last year, well, the year before technically, but for 2023, you can see revenue about $3.25 billion, net income about $300 million, right? So they brought in like $3.5 million in 23. Company has $170 billion market cap. So this is why, again, when it gets too high too quick, you have to expect a pullback, and it could happen even on an earnings beat. But if we check the numbers real quick, okay, debt slowly increasing, nothing to write home about $250 million as of last quarter, got $1.5 billion cash on hand, so that would be plus about $1.25 billion. Assets outweighing liabilities in both the short and the long term. Equity slowly inching up here. We're up to over $6 billion as of last quarter. Book value following suit up to $572 as of last quarter. But again, cash $1.25 billion, equity $6 billion. They brought in what, $3.25 billion. So my personal quote unquote fair value of this business is like $9-10 billion. And right now, market cap 107. Well, I mean, obviously, technically, it's 6% lower than that because it's showing the close price. But you understand my point, right? So that's down to like 162 billion right now. But my personal fair value of the business is 9-10 billion. So we're trading, 15 times whatever, fair value. So that's why it has been on the up and up, but now if they are going to bring it back down to earth, this is why at least this trend line here of the mid to low 130s, in my opinion, really should happen. And even if it breaks down here, sub 100, in my opinion, that would actually make sense. I mean, you could always potentially gap fill back here to about 80. It looks like that's where it gapped up after these earnings, exactly this time 1 year ago. And we technically didn't fill that gap, so that's always something to be wary about. But these are a couple of trend lines, in my opinion, I would keep an eye on. And again, it's most likely going to pull back, so I can't say when it pulls back, but hypothetically, when it does start to sell off and pull back, I would keep an eye on this fib right here. It looks like 142.39, and I would, because that's where it bounced last time. So I would see if it wants to bounce again, or if it pulls back below it, then I know we're going to test this trend line and potentially break lower. Let's look at stock charts. Let's see what we see here. RSI was climbing up to 63.5. Obviously, it's going to pull back now. Mid-Bollinger Band on a daily, about 153. So we can easily pull it back down to there. But also, again, you can see the 50-day sitting here at 143.37. 200-day moving average about 138.5. So again, 138, right? You can see how that can slowly potentially step down right to that moving average, right to the trend line here, and then bounce like it did back, looks like right after the bull dropped. So we probably will go down before we go up on ARM, but technically good quarter, good beat. MACD recently crossed to the upside here on anticipation going into these earnings. Now we're obviously going to reverse back down. RSI was holding steady here, middle of the road, started to climb up 62.6 on the weekly, and now we're going to pull back. And you can see also, look at the 50-day on the weekly, 137.68, right? So we have a lot of potential action, like 136 to like 138. So that might be where the stock wants to go. Options probably are expensive because, again, we're dealing with a pretty volatile stock. If you look at the beta, 4.26. Again, the beta, the overall volatility of the stock in relation to the overall volatility of the market. So it's about 4 times as volatile as the market. Let's see who else reported here. Yeah, Qualcomm I wanted to look at. I didn't look at the earnings calendar earlier today. Qualcomm, believe it or not, I probably would have said Qualcomm calls, And you can see that we had this resistance trend line that we recently got up above, anticipation of these earnings. Earnings come out. The company posts very healthy profits. They posted $3.41 a share. Analysts were expecting about $2.95. So they beat that mark by 15%. Revenue comes in light. Technically, really good growth from this time last year. If we go back this last quarter, analysts were expecting about $9.5 billion. The company posts $9.92 billion. So now they pumped up estimates to $10.91 billion, which may have been a little high, but the company ends up coming in a little over 10. They got up above that milestone, $10.08 billion. Technically, they missed by about $800 million in change, though, about 7.5%. Stock went from 175 roughly on the close, down right now to 167 1/3. It's down 8.5 points, roughly 5% right now after hours. Let's see what's going on here. Qualcomm says ARM has withdrawn breach claims, has no plans to terminate license deal. Said ARM has withdrawn a threat to terminate Qualcomm's license agreement with the tech provider. Okay. ARM in October threatened to terminate Qualcomm's license agreement amid a dispute over technology that powers Qualcomm's personal computing chips. In December, Qualcomm won at trial. Also, if you recall, Qualcomm was the company that was potentially floated with Intel. Remember when Intel was struggling? They came out with that really bad report. I think they took the stock to like new lows of like 18 or something. And then I believe it was maybe like within a couple of weeks, Intel spiked back up. And there were supposedly reports of Qualcomm, rumors flying that Qualcomm was going to take over their foundry division. But anything can happen. Anything can happen. ARM has withdrawn its threat. No current plan. Okay. Earnings beat. Stock still falling. Let's see why. Earnings per share rose 24%. Yeah, it was a really good beat on the earnings side. Revenue reached $11.67 billion, well above expectations of $10.9 billion. Oh, okay. So why is that showing 10.08? 18%. Strong demand in Qualcomm's chip segment, with sales up 20% on the year to 10.1. Oh. Wait a minute. Okay, I'm a little confused here. Smartphone chip revenue came in hot for the third quarter in a row, up 13% on the year to $7.6 billion. Expectations were $7 billion, almost a 10% beat. Though phones constitute 75% of Qualcomm's chip sales, it has two high growth segments for diversification. Quote, we are delivering growth across our diversification initiatives and remain committed to executing our fiscal 2029 targets to achieve $22 billion of non-handset revenues. Sounds like some serious growth. The auto chip segment saw revenue rise 61% to $961 million versus expectations of $890 million. Internet of Things continued to maintain the momentum since the chip was released last summer. IoT sales were up 36% to $1.55 billion. Analysts looking for $1.4 billion. So pretty decent numbers coming out of Qualcomm. We know that there's big growth and big demand really across the board in the tech sector, and it really almost doesn't matter what these companies do. And you're seeing growth again in old school kind of quote unquote legacy tech stocks like IBM. You got Qualcomm just humming along in the background. Again, these stocks right now they're slightly down after earnings, but ARM slowly inching up, consistently increasing the business. Revenue coming in steadily above expectations. So the growth is there, and that's why sometimes with these stocks, just like we looked at the ARM numbers, yeah, it's 15 times earnings. Now we might bring it down for a month or so, bring it kind of back down to earth, and then we could step in and we could buy it on a dip. Obviously, if you're already involved, this kind of sucks because you're just weathering the storm. If you can add, if you like it long term, that's entirely your own prerogative. But I mean, technically, like we said, if the business itself is growing, then in my opinion, you really shouldn't worry too much about stock price in the short term, right? Because if you're buying in the long term, you're really investing into the business. You're not just investing into the stock. So unless the company comes out with really big negative news, or they, randomly start offering shares to the market like crazy, causing mass dilution, dropping value, right? Unless certain things like that start to happen, then in my opinion, you should just kind of technically hang on and weather the storm. But again, markets near highs. So just keep that in mind. Revenue outlook came in strong, 10.3 to 11.2 billion, up 15% from 24 at the midpoint versus 10.3 analyst estimate. Okay. EPS guidance was for 280 at the midpoint, up 15% on the year, and higher than the 269 analyst estimate. When Qualcomm. Okay, I'm reading. Yep, revenue from smartphones. Okay. I'm reading. 12% annual growth. Wall Street analysts aren't convinced it can hold up. Yeah. There's a cloud over Qualcomm smartphone segment. It's looming loss of Apple's 5G chip business. Meh, it happens. Beginning this fall, Apple will begin to substitute 5G chips of its own making, and Qualcomm stands to lose most of Apple's business by the end of 2026. Yes, they have a famous relationship. Over 10% of sales from Apple? Meh. Another form of risk, Qualcomm's China business, 46% of revenue in fiscal 24. Chinese government would like to end the country's reliance on U.S. chips, Qualcomm included. Homegrown smartphone chips have gotten better, but still don't match the performance or efficiency of Qualcomm's top-end offerings. Still, Qualcomm is already losing business in Chinese low and mid-range Android phones. So, again, though, I feel this reinvestment back into America and the American tech, that's why, again, in the immediate short term, something like this news coming out of China, that we might start to lose some business overseas for Qualcomm, could potentially be made up here domestically. So, again, if they want to bring them down kind of on these supposed worries, like, I can understand it. But also, as I say, it's not necessarily a problem until it's an issue. Auto segment, yep. At the rate it's going, the Qualcomm segment will probably hit $1 billion in quarterly sales before too long. Smart devices. Okay. I don't know. Overall, I like it. And again, technically in the technicals, right, we came down. Look, you can see the stock dropped only about 7.5 points right now. We're down here at 168, which is very close to just meeting up with this 20-day moving average. So even if we do break, we might actually stay on the break up and out above this resistance trend line, right? So we can potentially slowly pull back here to like 157, 156, but then we can bounce and we can still remain bullish, potentially. Right? So we'll have to cross that bridge when we get to it. Let's check the numbers. 194 billion. PE of about 19. Not too bad. EPS has been solid. Again, we saw a dip in 23. Revenue coming back in 24. So that's, close to like 50 billion revenue and income for 2024. So let's check. The debt sitting here over 15 billion, but looks like, it was steadily on its way down. Went back up here for Q4, but slightly down from where it was this time last year. Free cash flow dropped from 3.8 billion to 2.39 billion. Cash on hand, 7.85 billion. Still a decent amount of cash on hand. Debt, obviously, about double that. So if we subtract, we're at like minus 7 billion and change. Assets outweighing liabilities, though, short and long term. Equity slowly stepping up to 26.25 billion. So what were we, like minus 7? So now we're at like plus 19 billion. Book value slowly inching up, 23.61 as of last quarter. So we're trading, what's that, like 7-8 times book. which isn't as bad as ARM, but what did we say? 19, and then yeah, like 50. So we're at like 69.70, and now we just dropped about 5%, which would bring us to like 185 billion. So yeah, about 2.5 times my personal quote-unquote fair value. In my opinion, that's not too crazy. In my opinion, that is not too crazy. And the good thing about Qualcomm also is that they pay you a dividend to own it. As you see, consistently been increasing that dividend year over year. Right now, it's currently yielding about a 2% yield as of the close. It's going to pop up a little more now that the stock went down, right? The dividend is proportionate of stock price. So the lower the stock goes, the higher the dividend is yielding. Let's check stock charts. Qualcomm. Okay, yeah, we got right to the top of that range. Stock, what? 167.75. Mid-Bollinger Band on the daily, 164.10. And what was I looking at here? If we come straight down, yeah, we're looking at like mid to high 150s. So this bottom band here, 150.78, we might not even see it that low. So we might see it drop down to try to retest the mid-Bollinger Band, maybe see like a flash crash of a couple of bucks, and then it might spike back up. So we'll see. RSI was up to about 59 going into earnings. Now it's going to cool down, obviously. Daily RSI, 67. We did run up and close above this 200-day moving average, and now we brought it right back down, and the stock is essentially sitting right here at the mid-Bollinger Band on the daily. 50-day moving average, 161.38, and bottom Bollinger Band, 155.17. So again, if we want to slowly come back down, you can see how we can bleed into the 155 range and then potentially bounce, but still be above our resistance trend line. So definitely a couple of levels for you guys to keep an eye on. Let's check the pivot points real quick before we move on. Pivot points on the daily, 167.5 is the next pivot point. Stock 167.70 right now after hours. So that's a key level to watch. And then if it happens to break down, you're probably, again, going to see the 50-day and potentially this pivot point as well in the high 150s, 158.22. So that may be what it wants to do. It might slowly want to bleed down, again, back to that trend line, and then potentially bounce when no one's looking and everyone loses faith. On the weekly, we have a pivot point right here at 172.80, which we closed above, but now obviously we dropped back down below. And we could maybe go back to the previous year's pivot point, which, as you see, looks like, yeah, maybe like 158, right? So you have a lot of action, again, at like the mid, not really the mid, kind of like the low to high 150 range. I know that's kind of vague, but again, you're looking for potentially about a 20-point sell-off from this level. Well, 12-point sell-off now after this drop, but you understand what I'm saying. Who else did I want to look at? We have Ford and Symbotic. Let's look at Ford real quick. Ford, okay. Stock closed at just about $10, down slightly, 1.5% after hours, 9.5, down half a point, about 5.25%. Company came out with a good beat on the top and bottom line. EPS reported 39 cents, analysts expecting 34. Revenue 48.2 billion, analysts expecting 47.4. So beat by about 800 million in change, 1.7 billion in revenue. Let's see. There were plenty of worries, okay? Outlook for 25 was a big disappointment. Okay, that's probably why shares are down. Ford reported operating profit of 2.1 billion, sales of 48 billion. We're looking for a profit of 2 billion. Okay, all right. For the full year, Ford generated about 185 billion in sales, selling 4.4 million vehicles. Revenue rose about 5% year over year. Vehicle sales rose about 1%. Looking ahead, Ford expects 2025 operating profit to land between 7 and 8.5 billion. That isn't enough. Wall Street currently projects about 9.3 billion. Wow. So that looks like a big miss. But again, we saw this. I know it's a random comparison, but I just remember off the top of my head seeing this with Fubo. Remember Fubo? When they issued that guidance and it was like slightly below what analysts were expecting for the full year, so they brought the stock down. And then what did I say? I said, give them a quarter or two. If they continue to trend as they have been, recently beating earnings, if they come in slightly above estimates one quarter, the next 2 quarters to start off the year, you watch, and they're going to reinstate the original guidance or potentially up the guidance. And that is actually what happened. So, of course, that doesn't mean anything for Ford, but you understand my point. So right now, this is definitely a pretty underwhelming guidance for the operating profit for 25. But again, you have to see, technically something like that, you have to come back in about 6 months and you have to see, okay, we're at the halfway point. Are we on track to really miss this mark like we were originally projecting? Or could we get close and could we get like 8.99 billion, right? So only time will tell. First quarter operating profit is expected to be at break-even levels. Lower production to help manage dealer inventory, lower pricing are expected to weigh on 25 results, especially in the early part of the year. Ford dealers had about 113 days of inventory on lots at the end of December. Industry average is about 75 days. Car companies prefer to have about 2 to 3 months of inventory on lots for sale. Third relatively weak quarter in a row. At the start of last year, Ford expected to generate profit between 10 and 12 billion. Higher than expected warranty expenses sapped earnings. They came in with 10.2 billion. Keep missing operating profit estimates. Okay. Quote, in 2025, we expect to make significantly more progress on our 2 biggest areas of opportunity, quality and cost. Quote, we control those key profit drivers, and I am confident that we are on the right path to create long-term value for all stakeholders. Ford's disappointing guidance comes after GM's solid guidance. A better outlook for 25 didn't help GM, though. GM shares dropped. Impact of tariffs. Warned that 25% tariffs, quote, would have a huge impact on your industry with billions of dollars of industry profits wiped out. Millions of cars assembled in Canada or Mexico. Well, that's their problem. What's more, roughly 30 to 50% of parts on popular models sold in the U.S. originate in Mexico or Canada. That's their problem again. Yeah, we're on a 30-day hold technically with these tariffs. Ford's electric vehicle business continued to struggle, losing $1.4 billion in the quarter and $5.1 billion for the full year. Losses exceeded the $3.9 billion in sales it made from selling about 105,000 EVs. For 2025, losses should be similar to 2024. President Trump promised to eliminate EV purchase tax credits worth up to $7,500. Yep. This hasn't happened yet. Yeah, so if your EV segment is waning and you were counting on those tax credits and now we're getting them potentially eliminated, then yeah, Ford could probably from this level drop even further into the low 9s, potentially high 8s if that news hits, or when it hits, we don't know. There was some good news. Declared a 15-cent special dividend. All right, that's cool. Ford paid a special 18-cent dividend at the start of 24. 65-cent special dividend started 23. So a little extra cash for shareholders. Regular quarterly dividend maintained at 15 cents. Stock was down. S&P was up. Okay. So not exactly a stellar report coming out of Ford, but these automotive companies, I feel like it's hard to own. Again, you had the big surge again 2020 with the lockdowns and everyone was paying double, triple price for used cars, new cars, just buying them straight up off the lot. And now they're left holding inventory. We spoke about this even like a year or two ago, back in like 23. Where we were seeing reports of the the slowing of sales on the used car lots and the fact that these people now have backed up inventory and the sales aren't coming through and they're just holding cars. Everyone stopped buying cars, right? Because I said anyway, speculated that back then probably anyone who needed a car probably got one, right? So that was kind of over and done with. So by shooting for the moon, trying to get the absolute highest sale amount that they could for every car on the lot, they may have shot themselves in the foot. And they mentioned again the inventory, what they say, like 115 days. The average is like 75. So that's why a couple of negatives coming out of Ford. Oh, my apologies. I'm telling you, this keyboard just has a mind of its own. But yeah, mixed report coming out of Ford. They technically beat, but meh. Pivot point down here at 959, stock right now 947, so we're technically below that pivot point. You can see next support level 910, right? So we may continue to drop, and you can see again we had a big surge here, and then even going into the summer we flattened out coming into the end of the year, tried to gain some momentum, and now we're giving it right back. So we may kind of continue this downtrend. You may see low nines, which technically would be new 52-week low. Well, stock right now technically is at a new 52-week low, but you could see low nines again, and potentially even a break here to this fib, 894. So because it was a beat, but they want to bring it down, but it wasn't the worst report, what you might see is just like a little dropping here to scare people out. You might see new 52-week lows, right? And we could potentially wedge and then pop up and out, and then maybe gain some momentum going into next earnings, as you see roughly third week of April. RSI was middle of the road, about 48 on the daily. That's obviously going to drop down. Weekly RSI 43. So yeah, we're probably more than likely going to test that 30 sub 30 benchmark. And you can see big pivot point here for last year, just below $9. So that's what? 890 and change, right? We were looking at this fib, 894. How you doing? Let's check the Bollinger Bands real quick. Bottom Bollinger Band 951 on the weekly. We're below that. And on the daily, bottom Bollinger Band 960. So yeah, we're below that. So that's why it looks like, yeah, like that 910, 894, 890 level. You may be seeing that soon for Ford. So again, I know it's a brand name company. I know the government bailed them out whenever it was, back in, I don't know, like after 08, 09, right? We started to get bailouts coming out. I mean, the company's still paying their dividends. It's yielding almost 6% now. But what I'm concerned with a company like this, again, is the consistency. And I know that revenue technically is up, but as we saw through the articles, I feel like there's always negatives that they try to highlight when it comes to these auto stocks. That's why I personally never really like them. But again, that's just me. But I understand if you like it, it pays a dividend, but yeah, I don't know. Again, it's just me. I don't know. 150, 100. Wow, debt jumped up from last quarter about 7 billion and change. Cash down about 3 billion from that time last year. Free cash flow up about 0.7 billion, went from 2.3 billion up to 3.5 billion as of last quarter, but obviously debt outweighing cash, so that would bring us down to like 136 billion. We do have assets outweighing liabilities in both the short and the long term. Equity was at about 44.28 billion, drops down to sub 43, and has since slowly climbed back up to 44.34 billion. Book value as of last quarter, 1115. 1115. I think I disagree with that. Give me a second. We were at what, like minus 130 on the debt? So now we're still at like minus 85 billion. And if we come back to last year, we're at plus 180. So that would put quote unquote fair value at, yeah, about 100 billion. Wow. So you could make the argument that you have the potential to run up to, $20 a share, but it looks like it's pacing itself. It looks like it's pacing itself, which of course is not what anyone wants to hear. But you can see we had the big drop and then we had the big pop, and now we're just slowly channeling down, right? So it looks like, what was the high here? Yeah, like 25 and change, 25.80 or something. So it looks like, and we'll get close enough. There you go. See what I mean? So it looks like kind of a long-term descending wedge, right? And if you want to stretch it out, if they do hypothetically want to keep it in this range, then you can see how for several quarters here we can stay in this range. And again, you see bottom of the screen, we're looking at mid 26 before we potentially approach the apex and break out. So you might be dealing with the situation like that. But again, down in the comments, if you like Ford, if you thought it was a good report, if you owned it for a while, again, the government bailed them out. So as we looked in the numbers, if you feel it's undervalued, it's a brand name, it's not going anywhere, you like it, again, of course, to each his own. Very understandable if you tell me you like Ford. Because again, they technically did beat, but stock is down. But we're seeing that pattern almost across the board here. Last one real quick, Symbotic. Symbotic. Okay, so they missed. They swung back to negativity here. They posted a loss of 3 cents a share. Analysts were expecting positive, about 3 cents a share. So they missed that mark. And revenue came in slightly under expectations. They were looking for 490 million. Company posts 486.69. They missed by about 3 1/3 million. So technically slight miss on revenue, big miss on the EPS side. And we can see stock dropped here to about 26, closed a touch below 31. Now it's sitting a touch above 26, down almost 5 points or roughly 15.5%. Looks like it's slowly, look at that, coming right down to that trend line potentially of just about 25, maybe 24.98. So that's the level, in my opinion, you have to keep an eye on, because you can see that big dip right here in the beginning of September. And then I drew that trend line out coming up, touching the bottom right there, December 19, 24, January 13, 25. So that's the bounce. This is the support trend line now that the stock's been above. So you want to see it hold that trend line. Otherwise, it's going to break down to the previous support, which, as you see, is going to be about 20 bucks and change. So that right there, it is very close. If it does happen immediately, again, you're looking at about $25, and the stock technically did not hit. Now it came down to about 25.40. So that's the key level to keep an eye on. Let's check some numbers here. Compares to a loss 2 cents a share a year ago. They posted 3 cents a share just now. Company surpassed EPS estimates 3 times last 4 quarters. Revenue this time last year, 368 million. The company over 486 million, even though they slightly missed. Still pretty good growth. Okay. Here we go. Okay, robotics warehouse automation company, Monday. Lost about 3.5 million compared with 2.8 million same period last year. Revenue rose 35% again, up to 486 million, slightly missed that 490 mark. Adjusted EBITDA rose to 17.9 million from 8.1 million a year ago, so 100% move. Had most recently got it for quarterly revenue of 495 to 515 million, and adjusted EBITDA of 27 to 31 million for the first quarter. So that sounds pretty promising. Quote, with our recent acquisition of Walmart's advanced systems and robotics business now completed, we look forward to enhancing an already strong position to drive exceptional results for our stakeholders. For the fiscal second quarter, Symbotic expects revenue of 510 to 530 million, growing up to 30%, but coming below the 533 million forecast by Wall Street. It also forecasts an adjusted EBITDA of 26 to 30 million. So, yeah, slightly down. Yeah, see, again, I don't view it as a big deal, Again, these companies, look, revenue rose 35%, but it was just shy of the mark. They were looking for whatever, 37, 38%. Like, I don't know. Again, that's why I always say, if they bump up estimates and a company comes pretty darn close, like, I appreciate the pullback, but I don't know if you can really decimate a stock because of it. And again, you can see, look at last quarter, right? I mean, the company, 470, they post over 570. So, and the stock dropped, right? So the revenue has been pretty steady for the most part. Obviously, you'd like to see them beat the EPS miss. I mean, that didn't help at all. But yeah, hit and miss, going 50-50 the last 4 quarters on EPS. Revenue growing nicely over the years. Again, closed out 24, just about 1.8 billion in revenue with a slight loss. So year before 1.18, year before sub 600 million. So they're growing nicely. And again, they got this Walmart robotic systems. 18 billion market cap. And yeah, just, I mean, you can call it like 1.7 for last year. So they're trading like 10-ish times last year's revenue. Well, this year's, I guess 24, yeah, last year's revenue. Let's check. Yeah, debt is essentially non-existent. 17 million as of last quarter. Cash on hand over 728 million, again, as of last quarter. But if we subtract these numbers here, you're sitting over 700 million. The equity has been climbing up nicely. Again, we dipped down 2 quarters ago, bounced back last quarter, sitting here at 390 million. So you're at what? Yeah, like 1 billion in change. Book value $1.88. So yeah, you're 1 billion in change plus that like 1.7. So you're at like 2.7, in my opinion, quote unquote, fair value. And you just lost about 2.7. So now you're down to 15.4 at 2.7. Is, yeah, what, like 6 and change times fair value. So again, you know, this one did get pumped up, so we could again slowly see it come and pull back down to earth. I do think it should definitely, in my opinion, come to this trend line here of about 25. If it breaks, it goes to 20. Yeah, that's possible too. That's possible too, actually, especially at the rate at which they were growing the revenue and coming in above these expectations. There was in line, right? But we had these sprinkled in quarters where we had these big beats by a chunk. Again, that's only 3%, but again, 13 million beat. Here, 27 million beat, right? Almost 6%. Here they beat by 100 million, and then boom, we miss. So that kind of just deflated the whole situation, right? So that's why, again, in my opinion, watch that 25 trend line. You could potentially see 20 if it breaks. We'll check stock charts real quick. I'll let you go. Looking at 4 companies. I know we're talking for a while. We're looking at the daily. The stock got up and closed above that 200-day moving average, but now rejected. So we're down here at 26.37. We just broke below that 50-day moving average as well. Bottom Bollinger Band 23.68. So if we now come down, see how we're stepping down potentially, up, down, up, lower, low maybe. So we may come down into the low 20s. So you might see that 23.68, and then you might see that $20 mark at the trend line. RSI middle of the road, daily and weekly in the 50s, right? That's obviously going to pull back. And look, the 200-day moving average now established at about 23.61 on the weekly. So now that 23.60 level looks like a very key level that they may pull the stock back down to. So any of you traders out there, you might be able to do a quick little trade and ride the wave down and then get out at the bounce potentially. Bottom Bollinger Band on the weekly, 21.41. So again, you can see big run up here into 23 halfway through, and then we've slowly been kind of stepping it down, bringing it back down. So that's why we might actually continue to drop. And you can see roughly a 30% sell-off maybe back down to the very low 20s or maybe $20 even. Pivot points real quick, I'll let you go. Had a pivot point right here at 31.65 for the weekly, which it didn't hit technically. But again, we're going to pull back probably there to the low 20s. And look at the pivot point for 2024 as of last year, look, slightly above $20 a share. So that's why I'm saying we have a lot of action around 23.60, and then we potentially have even more action at around the 23 level. And look at the pivot points here on the daily. Look at the support level dropping 23.94, right? And we have what, 23.68, 23.61. So that might be where they want to take the stock, in my opinion. And also, again, if we look at last month, look at that pivot point. Looks like, yeah, just shy of 20 and a half. So what, like 2040? And that's what I mean. That's why if we bring it down, look, you can see 2030, right? 2036, 2040 and change. So we might flash and break right down to that and then potentially have a nice bounce and gain some momentum going into next quarter's earnings, looking for the first couple of days of May for Symbotic. But probably over the long term, in my opinion, probably going to be decent. Again, I know they were growing nicely. They recently made that acquisition. Chances are they probably wouldn't have made the acquisition if they felt it wouldn't have helped the business in the long term. So again, we might beat it up and kind of bring it back down to earth over the next month or two. But over the long term, in my opinion, should be fine. I know we looked at this a while back, and the earnings, again, have been pretty healthy. So, you know, if you tell me, oh, if SYM dips down, I'm buying some. I can't really call you crazy for that, but those are, yeah, just pretty much the top couple of companies that reported. I know there were other ones like Viking people look at, and Skyworks I saw reported, but I feel like those are a couple of the biggest names that people were maybe keeping an eye on, playing, or holding going into today's earnings. So I figured we'd review those 4 names. But that's it. I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop them down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.